this is a big thing. We have entered in the last few months in an unprecedented crisis, which of course has grave consequences for the health of European citizens, but that will no doubt also have a huge effect on the economy. What we've been seeing is how the economy has been dealing with the first shock. And if you think back of the last crisis, 2008, or maybe the Euro crisis of 2012, you see that many of the regulatory measures, the whole regulatory framework was in a much better state. Many of the designs that were put in place after the light crisis are now proving their worth, because the system, the financial system, is holding up. What I noted personally is that after the crisis in 2008, supervisors were trying to think nationally rather than European, a problem that we today unfortunately see with some politicians. And as representatives of European Association, I of course always seek European solutions. If I look at this, is the banking union has worked very well, and indeed I am a representative of the banking sector, but to have one supervisor that could take quick steps without having to negotiate with countries has proven a very good point. Secondly, the higher levels of capital and liquidity in the financial system no doubt also has helped to deal with the first shock. Nevertheless, we also found quite a number of issues that may have a pro-cyclical measure. So we thought to organize this webinar to inform you and to discuss with the members of the European Parliament and other interested stakeholders what to do, what do we see, and how can we go forward. So today you will hear from our President, Mr. Karas, on behalf of the Parliament, but also because of his wider view in Europe. We are very, very happy to have John Berrigan of the European Commission, DG FISMA, who literally stands in front of the fire and is trying to extinguish it for all of us. And then on the industry side, we have Riess of the Federation of European Security Exchanges, and Tanguy van der Werve of EFAMA. Hopefully it will lead to a fruitful discussion, and hopefully this is not the first. We plan to see if we can organize a few more of these, which should be short, sweet, and look at different aspects of how the industry, how Europe can fight this crisis for its citizens. But now let me give the floor to Othmar Karas. Othmar.
Yeah, honorable members of the European Parliament, honorable dear Wim, dear John, and dear Rainer, thank you very much for being with us. Thank you very much for joining our webinar. I'm very happy that the EPFSF Dialogue Forum is continuing its work. Since the virus cannot stop us, we are adapting. Today's discussion is indeed the first only session, online session with MEPs in the forum since 20 years long history. Even at this difficult times, our platform will continue the dialogue between MEPs, the Commission, and affected stakeholders. Especially now, this exchange is extremely important to find the right answers for during and after the crisis. The objective of our today's session is clear. We want to discuss the impact of the virus on the financing and of our economy behind the health sector, where banks play, of course, a crucial role. This impact is substantial, since all member states are facing a massive symmetric external shock on both the supply and the demand side. And we can say now, we are in a better shape now as we were at 2007, because we have some instruments created after the financial crisis we are now using, like the ESM, as our answer to the financial crisis. In any case, I think our general political answer must be more cooperation and more integration. And we have to think about and look common European projects, also common financial instruments, and not only national perspectives. We are much stronger now than when the financial crisis hit over 10 years ago. It shows that we need to continue to strengthen our economic and monetary union. And this shows that we need to do it together. Even so, there is still no agreement on a common fiscal response. The finance minister will resume talks tomorrow. There is progress, but I am at the moment not very optimistic. They are too much discussing about details, too much proposing national answers, and they are not looking for a common European capacity of banks to finance our economy. I welcome that during the last weeks, the Commission, the ECB, the SRB, EBA, FISMA, and IOPA have all adopted a number of statements and guidelines on how to use flexibility in the current rules for financial institutions. At the same time, the EU legislative agenda is adjusting. European democracy remains fully functional, and the Commission is revising its works program for this year. Against this background, I have mainly three questions to the representatives from the financial industry. First and foremost, how are you doing? How is the condition of your financial institutions during these times of crisis? What are the biggest barriers, impacts, and lessons learned with regard to financing the economy? Second, concerning the EU response, are the current measures enough? Do we need further actions in this acute phase? For example, with regard to ensuring more coordination between euro and non-euro members, a potential extension of transnational arrangements on EFRS 9, regulatory forbearance, the treatment of non-performing loans, and the EU-wide ban of short selling by ESMA. Third, how do you assess the instruments of Corona bonds for the recovery phase? Could they constitute a safe asset for financial institutions? Which institutions should ideally issue them? And my last one, I am sure that also the European Commission will give us a clear insight on this and other issues. I am very happy that Director General John Berrigan is with us today to give us an overview on the current work of the DG. John Berrigan, the floor is yours, and our forum is always open 24 hours a day for questions, always open to coordinate platforms of discussions. And I think this crisis can also strengthen our forum as a forum of dialogue about financial issues. Thank you very much for being with us.
Thank you very much, Othmar, and thank you to all for the invitation to be here today. These are busy days, but part of my job is to speak and listen to people. So I'm very happy to be here in your forum. Let me start by wishing you all well and hoping that you're all safe in what are pretty unusual circumstances by any standards. As Othmar kind of said at the beginning, I mean, the COVID-19 is first and foremost a health crisis. We have to recognize that, and it's important that we solve this health crisis. And as part of that solution, of course, this has involved confinement measures which have shut down, between 2/3 and 3/4 of the European economy at one point or another. So this means that the health crisis is also taking the form of a severe economic shock. As Othmar said, it's an exogenous shock, it's a symmetric shock, but it's exogenous, symmetric, but it is big, and we have to accept that. And because it is big, it is creating serious cash flow problems for a large number of corporates and households affected. So the strategy has been to inject liquidity into the real economy. So this time, the financial sector, the sector I deal with and Othmar dealt with and others, are not at the center. This time we are part of the solution, right? Because the strategy is to inject liquidity into the real economy, but to use the bank channel as the conduit. Banks, despite our best efforts to build capital markets over the last 5 years, banks remain the main conduit for channeling credit into the economy. So what is the strategy? As I said, the strategy has been to make a lot of liquidity available to the banks. So the ECB has provided LTROs and TLTROs at very favorable rates. It has also supported the market through massive asset purchase programs, including its new one, the PEP. So the banks now have liquidity or access to liquidity to lend. The supervisors have then given them capital relief. They have allowed them to use their buffers to lend that liquidity onto the real economy. So it gives them space to lend. We, the Commission, together with the ESAs and with the ECB, have been looking at ways in which we can give regulatory relief. A part of that is through operational measures. So we have, the supervisors have lightened a lot of their operational burdens, their reporting requirements. On our side, we have, as you have known, postponed a number of deadlines, not just for consultations, but we've postponed deadlines for legislative proposals, such as Basel 3.5. So all of that, again, is to give some sense of some space for the banks to do the job that we need them to do. And then lastly, we have, of course, as has been mentioned by Wim and by Othmar, we have looked at the flexibility within the capital requirements framework around the interpretations of IFRS 9, particularly the expected loss provisioning under IFRS 9, and then the classification of non-performing loans. And you will have seen a series of statements coming out of the authorities indicating where that flexibility is and trying to give signals across member states of how various schemes, because one of the problems is the member states have chosen to do all of these things in different ways, but we have issued all these statements to give some clarity about how expected loss provisioning and how classification of non-performing loans will be handled under the capital framework. Then, of course, on the other side, member states have come forward with guarantees. That, of course, works on the borrower side, so it makes sure that the borrowers are creditworthy. And so the banks have the space to lend, and then they have the ability to lend because their borrowers are creditworthy, either on their own or with the help of these guarantees. So the strategy is quite clear that we want to inject liquidity into the system during this acute phase of the crisis where there are cash flow constraints. Now, we are continuing to work with the authorities to see whether or not that flexibility is enough. So it is quite difficult to do this on a systematic basis, to draw out data on a daily basis to see how lending is going. But we are trying to keep in touch at all levels, SSM, ESAs, the Commission, with the sector, with the banking sector, to see if this strategy of injecting liquidity into the real economy through the banks is actually working, and whether other obstacles are emerging to stop it, and if they are, to what extent we can address them. So that's an ongoing piece of work. Now, of course, behind the scenes and beyond what I do in DG FISMA, the Commission has also given a number of other regulatory changes. It has effectively suspended the SGP using the General Escape Clause. So the member states are free to inject fiscal, to make fiscal interventions as needed. The temporary framework for state aid rules has been put in place, which is relaxing a lot of those state aid rules to the corporates. So it's clear that under the state aid rules, the aid is possible to corporates and to households, and this does not affect the bank. So again, it frees up the channel of liquidity. We have to keep looking and keep listening. What we're trying to do is to use as much as possible the flexibility within the rules without throwing out the rules completely. as Wim said earlier on, I think as Othmar also said, one of the reasons why the financial system is part of the solution this time and not part of the problem is all the work we did over the last 10 years. So the financial sector has come into this crisis in much better shape, and therefore is able to be part of the solution and is not becoming part of the problem. So when we want to give flexibility, of course we want to give as much as possible, but we don't want to give flexibility in a way which will fundamentally undermine all the progress that we have made over the last 10 years and have sort of counterproductive effects in reducing confidence in the sector. So this is a difficult balance to find. It is, in a sense, a try and see approach. So we give flexibility, we see if that flexibility is enough. There are more things that can be done. I have to be honest, if we go much further than we have already in terms of flexibility, we're probably bumping into legislation, and there might need to be legislative changes. And that, of course, would require emergency procedures. It would require everybody to agree rather quickly around things. But that is not ruled out. Most of you will know that the Basel Committee has now decided not just to suspend the deadlines for Basel 3.5, but has also decided to extend parts of the transition for expected credit losses under the IFRS 9. So they're extending the transition periods. Unfortunately, those transition periods are in level 1 legislation in the EU. So if we are to follow that and maintain our position with international consensus, I think we should, that would suggest we have to make some changes to the level 1 legislation, and that's the way it is. So I think in terms of the acute crisis, we continue to work with the authorities, as I said, at least in DG FISMA, to try to look at the framework and see to what extent we can use the flexibility and give clarity to the market, and if necessary, create additional flexibility. But that's for the acute phase of the crisis. I think this crisis will essentially have 3 phases. There will be the health phase, where I think, and I'm not an expert, but my understanding is that we're beginning to see the first signs of positive results from the confinement strategy on the health crisis. So we're not by any means there yet, but at least we're going in the right direction. When that health crisis is solved, and already I see it in the market, people are immediately turning beyond this acute phase of liquidity to the next phase. And the next phase is recovery. And in that phase, it's going to be much less about liquidity and much more about solvency. So companies will emerge from this shutdown of the economy and will try to restart, but they will have a lot more leverage, and they will be restarting into a recovery that we simply don't know what it will look like. Everybody's hoping for a V-shape, but I think everybody secretly probably accepts that that's not the scenario, and we are more something longer. I'm hearing myself, so I don't know. So I think we have to already start thinking now about the recovery phase and how we're going to look at that. I think is exactly where Othmar was talking about what's going on today in the ECOFIN and the Eurogroup discussions, where these are the instruments which we will need to have in place to help us to launch the recovery, not just on a solid basis, but on a basis that preserves the level playing field across member states. Because you have to remember that when we come out of this crisis, member states will look different, not just in terms of their economy, but in terms of their sovereign capacities. And a lot of fiscal injections will have been made, a lot of debts will have accumulated. And so the quality of sovereigns, which is already different across Europe, is going to look even more different. And that means that the capacity of member states to launch their own recoveries will be different. And that makes, as far as the Commission is concerned, a very strong case for a European response in the recovery and not a member state by member state approach. And that is what is being discussed in the Eurogroup now. It seems to be a rather difficult discussion. It's not surprising, it's always difficult discussion, but let's hope that they come forward with something that is meaningful. All I will say before concluding is that as far as we're concerned in DG FISMA, I keep getting questions about whether or not we will now tear up our priorities and just focus 100% on relaunching the economy. I don't think this will be either wise or justifiable. If you think about our 4 core projects, banking union and capital markets union, I can't help feeling that if we had entered this crisis with a better and more integrated banking sector and a bigger and more integrated capital market, that our chances of coming out of it in a V rather than a longer U will be higher. So the case for banking union, the case for capital markets union will be stronger after this crisis, not weaker. If you then look at the other 2 core, which is the ESG or sustainable finance agenda, well, of course, this is a huge crisis. It's a very immediate, punctual crisis, but it doesn't take away from the fact that behind it we have another big crisis, which is the climate crisis. And I understand somebody yesterday from, I think it was Goldman Sachs, said to me they had done some initial estimates showing that even with 3/4 of the world in some form of confinement, the reduction in emissions is only about 1/5. So that is some idea of just how important a problem we face in terms of the climate. So I think it makes a lot of sense that when we launch the recovery, we try to launch that recovery in a way that's also consistent with sustainable development going forward. And then the other core activity of digitalization, well, I mean, I think the fact that we're all sitting here having this very interesting conversation across a technological platform is evidence that, if anything, this crisis has revealed that digitalization and technology are going to become more a part of the way we work and not less. So again, I think we don't see any reason to tear up our priorities there. And as for anti-money laundering, well, unfortunately, that doesn't really change no matter what happens outside. So I just finished by saying that I have to be honest and say that member states and the EU did not enter this crisis in a terribly coordinated way. I don't think Europe benefited terribly from the way in which we entered the crisis. So it's really very important that we exit it in a coordinated way, and that we exit in a way that we reaffirm the priorities of the European Union in terms of banking union, in terms of capital markets union, but more importantly, in terms of solidarity. Maybe I'll stop there and I hand the floor back to you, Othmar. Thank you.
Thank you very much, John. You covered all the important issues, I would say. Let me start with technology, because indeed, thank God, we've all become totally professional in video calls now. Unfortunately, I have personally found that video calls are so efficient that sometimes I sit in front of a camera from 9 o'clock in the morning till 9 o'clock in the evening. So I long back to the office where I can hide behind the coffee machine. Having said that, to all of you, as we are having a conversation with 90 people currently, may I remind you to mute yourself. Otherwise, we all of us get intimate knowledge of your daily lives and children and papers and coffees that you drink. Having said that, I do believe that indeed the whole agenda should certainly not be underestimated, and you made it perfectly clear. I am an optimist. Yes, Europe could have entered this crisis better, but I still go back to what we've done, and it shows that the banking union has worked very well, and I'm a firm believer in that. What we'll have is, as an additional point on the agenda, is that after the health crisis is over and once we're in the recovery, that it's a good time to look back and see what worked and what didn't work, and be critical at ourselves on analyzing what worked and what didn't work, and take the strong points of the banking union and the higher capital and liquidity levels forward. I also note indeed that the Commission has done a lot in extending some of the legislative deadlines. That was highly appreciated, because I think that the pressure that puts on the system was quite high. Having said that, let me now invite the 2 industry speakers who will speak on behalf. They are from exchanges and fund managers, but they will speak on behalf of many of us. I know that they have asked quite a number of us for our position, and give them the floor, and then turn to the honourable members of the European Parliament for their part of the discussion. So Riess, if I may start by giving you the floor, please.
Thank you, Wim, and thank you, Othmar and John. I think I would very much resonate what's been said so far. I think this is a health crisis that obviously will result in probably the most severe economic crisis since the Great Depression. And I think, as John said, the financial sector is here very much part of the solution. I would also, I think, put my contribution here a little bit under the heading that, yes, liquidity and credit are important in the short term, and I think we cannot underestimate the need for that at the current crisis. But I think, John, you very correctly said, this is a crisis where we'll ultimately need solvency, and that's, in other words, equity to recapitalize the economy. So I think capital market union, and I hear the ideas of a Marshall Fund for Europe, recapitalizing the economy, and to do that in a European way with equity will be, I think, very, very important. Let me probably come first to Othmar's first question, how is the system doing? And I'm talking obviously mostly for exchanges, but I think that is also true for banks, asset managers, insurances, and payment services. I think we've, of course, have all focused our immediate resources on working effectively to fulfill our economic role and support financial stability, allow for risk management, allow for liquidity for economic subjects in this crisis. And I think exchanges, as other parts of the financial industry, have implemented their contingency plans since day one. And I think that really shows that the work we've done in the past is really paying off. Everything so far is working very satisfactorily, including the working from home protocols. And I think we're in very close corporations with supervisory authorities. So I think that is to say, even in the critical days when volatility was extremely high, the financial sector stood up, markets kept open. And I think that really ensures that orderly, fair, and transparent markets where liquidity and risks can be managed are there. And that really, I think, is one important step to prevent chaos and panic. And I think we were quite capable as a system to do that. And I think also a good news is that all safeguards, such as circuit breakers, trading halls, etc., worked well. And I think that gives testimony that what we've done, I think, in the past, in terms of regulation for market infrastructures and market participants, has worked well and properly, and has been designed for this kind of situations, and I think it's worked. Obviously, regulated entities need operational resilience, and I think so far the banking sector, the exchanges, the infrastructures, etc., have shown that. I mean, probably come a little bit to an initial assessment on what does that mean and coming out of it. I think this is a crisis where I would very much resonate what Othmar and John have said. This is a crisis that will require a very strong European response, not only in the short term. I think we need to resist the temptation to erect barriers. And I think it's quite sad for me as a European to see how much barriers have gone up in a very, very short time frame, even when most scientists and health officials say that erecting barriers is probably not very helpful in combating this crisis. I think we need to avoid renationalization and greater fragmentation, as it will only make all of us poorer and more vulnerable. But I think we need to speed up, I think, how to become a more sustainable, a more digital Europe, and to really pursue the ideas that can make our economy as a whole stronger to compete in a global economy. Now, to look a little bit, what does that mean? I think we've spent a lot of time on banking union, and we talked about it. And John, you rightly said, if we wouldn't have done the work in the last 12 years, we probably wouldn't be there. I would probably extend that to MiFID and some of the parts we did there on strengthening market infrastructure. For example, Othmar, you asked about short selling. We have, I think, a very transparent regime where now short selling can be seen by authorities. And I think that is a transparent that simply wasn't in place 12 years ago. So far, that has worked rather well, that I think authorities could assess what are positions in the market. So I think so far, the work we've done seems to be paying off. I think we've seen, and we still will need to see some quick fixes, John, as you said, but to me, really how to re-equitize the economy will be key, because I think what we're also seeing right now when talking about capital market union, we always said the European economy lacks equity in comparison to Asian or American counterparts. We're more prone to exogenous shocks because we simply have less equity in our system. And I think when looking a little bit at this, that means, yes, as a first step, banks, governments, central banks, developmental banks have reacted swiftly to ensure that credit and solvency and liquidity really remains functioning in these critical days. But obviously, when solvency is lacking, the transformational mechanism of banks can only work to a limited extent. Therefore, I think next to the banking system, it is also very, very critical to, I think, come up with a European model how to solve the solvency point. And John, you alluded to that. And I think the real economy, even before, lacked the equity buffer for exogenous shocks. And I think to regain creditworthiness and how to probably also deal with some of the companies that most likely will have to be nationalized as a part of rescue efforts, and how to bring them back to the market. I think that will be key, and that's where we need a European answer. I think equally important is an adequate and enforced market structure where transparency and liquidity for price discovery is important. We see these in these days where a lot of the not so transparent venues simply seek operating or supply the services that they do. And I think the sunshine liquidity is gone, but I think the really the resilient, transparent, lit markets, they continue to operate. I think these good functioning secondary markets are really a preconditioning for the primary market. And I think we will need to think very hard now how to be creative to keep the IPO market and the market for secondary issues open. And I think here we really need to think how policymaker can ease the path for companies to get equity from IPO markets in the months to come. There's the EU fund where we're already thinking as of 2021 to potentially help how to bring companies to market. How can we recapitalize companies maybe in conjunction with private investors? What can developmental banks do here? And I think all these ingredients come together to really make the capital market union much more to a core. So I think to probably close here, for me, I think equity is the game changer. We need to think about how to finally do that and how to bring about a sustainable and resilient economy in the EU that will be able, I think, to increase the equity funding part as the real economy. So really that U is going to be short and that the companies are going to be solvent, that transformational mechanisms of credit start working properly also within this crisis and especially afterwards. And I'll maybe stop here.
Thank you very much, Rainer. That was a perfect overview, and that brought it indeed beyond the banking sector and into markets, which was very interesting to listen to as well. Let me, without further ado, immediately go to Tanguy van der Werve, who will also have a broader view on how we are and answering Othmar's starter question, how is the financial industry doing? Tanguy, you have the floor.
Thank you, Wim. First, let me echo what was said about business continuity plans. I think it's quite remarkable that we have all been able to ensure business continuity in such extraordinary times, and we should all be proud of what we have accomplished so far. I wouldn't want to repeat too much of what has already been said by John and Rainer. My intervention will therefore be short and structured in three parts. First, I'll be looking at what we feel is required from policymakers and supervisors in these extraordinary times as far as financial markets and services are concerned. Second, I will be saying a few words on how the fund industry has fared so far and what it has done to protect the interests of investors. And then I will make some observations regarding the future. So first, the policymakers and the supervisors. We believe that a crisis situation as unprecedented and severe as the one we are facing requires 5 key things. And some of them have been mentioned by John already. First, bold and prompt actions. Second, prioritization. Third, flexibility. Fourth, very good communication. And fifth, proper communication. And I'm pleased to say that assessed against these expectations or criteria, our experience with the European Commission, as well as with the ECB, the Basel Committee, IOSCO, ESMA, and the NCAs, has been largely positive so far. The launch by the ECB of its Pandemic Emergency Purchase Programme is a good example of prompt and bold action. We are very supportive of it, although we think that the scope of the programme should be enlarged. The need to prioritize results from the acknowledgement that while business continuity plans have been successfully implemented, the current working conditions remain extremely challenging, and all available resources are being used to maintain business continuity and manage risks in the best interest of clients. We therefore welcome recent decisions to, for example, delay deadlines for responding to consultations. The need for flexibility refers to the necessity of providing market participants with some leeway when it comes, for instance, to regulatory reporting. With the staff working from home when they are not sick, it has become much more difficult to comply with all detailed reporting requirements and to deliver on time. We therefore welcome the recent decisions made by some of the ESAs and the NCAs to relax some reporting requirements. Forbearance falls under this flexibility heading. The need for coordination refers to the necessity of getting all relevant stakeholders to move in the same direction. This is particularly important when it comes to the work of the ESAs and the NCAs. We welcome, for example, ESMA's recent public statement to ensure coordinated supervisory actions on the application of SFTR. Finally, the need for proper communication refers to the necessity for policymakers and supervisors to communicate clearly to the market, as is being done very well by, for example, ESMA and many NCAs. Of course, this is a two-way street, and it is vital that market participants spontaneously inform the authorities of any difficulties they face or anticipate. Turning now to the second part of my intervention, how has the fund industry been navigating the crisis so far? I would summarize it in 4 key messages. 1. Despite record levels of volatility and substantial outflows in some types of funds, the situation is manageable and our industry is proving resilient. 2. The liquidity management tools available to asset managers, as promoted by IOSCO, are fit for purpose and always used in the best interest of investors. 3. A few funds have been suspended, and those that were suspended are essentially property funds or high-yield funds, not equity funds. And 4, such suspensions tend to be triggered by difficulties in providing a fair valuation for certain assets in the fund. Finally, when it comes to the future, we have more questions at this stage than ready-made solutions. This is because, as I said, we are still in full crisis management mode, and we therefore expect the 5 criteria that I mentioned earlier to guide any actions in the short term. That being said, some of the questions that we will need to be addressed in due course include the following. Given the situation we are in, delays in consultations or in some of the level 2 work, will there be a need to postpone the effective application dates of some level 1 measures already adopted by the co-legislators? Looking at the European system of financial supervision, and at ESMA in particular, should more comprehensive temporary regulatory forbearance powers be granted to ESMA? Also, has the crisis exposed the need for further supervisory convergence, and if so, where? it comes to CMU, how to ensure that CMU remains a top priority. How to address the evident shortage of equity in the system that Rainer was referring to a moment ago. How to improve liquidity in the corporate bond market. What impact will this crisis have on retail investors' confidence in markets? This is the second crisis in less than 14 years. How to further develop the much needed European securitization market. And as many new taxes are likely to be introduced by member states in the years to come, how to avoid the introduction of new taxes that run contrary to the CMU objectives. Finally, regarding the European Green Deal, a key question for many of us, I would assume, is whether the principles of the Green Deal should form the basis of any post-COVID-19 recovery. I will leave you with these questions, Wim, and I look forward to our debate.
Excellent. You leave me. Thank God you didn't end with, I leave you with these questions and I hope you answer them now. But hopefully, thank God you share them with the full group for debate, because indeed, these are important issues that we all need to find together. So thank you very much, both of you. May I now open the floor for questions or statements or parts of the debate from the honourable members of the European Parliament. Is there anybody who can give the floor? Please, if you're a member of Parliament, take the floor now to answer or ask a question or to give a statement.
Hello.
Yes.
This is Pietro Fiocchi from the ECR group, talking from Italy.
Hello. I hope you are all right and your family is all right, sir, in Italy, because Italy is, of course, severely struck by this health crisis.
Yes, if I can survive being locked in the house with a wife for another week, yes, I will be all right. No, I have only two questions, because this is foremost, like others before me, very technical people have said, it's a human and a health crisis. Then it's an economic crisis, but it's also a political crisis, because there are a large sector of the European population that are not very happy or have a feeling that the European Commission does not have a sense of urgency in dealing with this crisis. And this is important, in my opinion, because there is a possibility of a larger number of people in several countries like Italy, Hungary, Poland, which are going to join entire European countries. So we could have potentially also a political crisis here. My two questions are the following. Number one, which was just mentioned, the suspension of the Green Deal, because obviously we need a lot of economic resources to survive this crisis. Some estimate thinks of 3,500 billion euros of loss of GNP for Europe in 2020. So from a very practical point of view, it's very difficult that we could go on with the Green Deal plan at the same time trying to tackle the corona crisis. So this is the first question, probably for Mr. Karas. What is his opinion on how the situation is evolving? The second is a more economical one, and is concentrating especially in Italy, but generally speaking on all the European countries with a very high debt to GNP ratio. Italy, of course, is the biggest case because it's also one of the biggest economies in Europe. There are some projections by Confindustria, but also Commerce Bank and Goldman Sachs, which puts Italy with a deficit between 6 and 10%, and a debt to GNP between 147 and 160%, with some calls to degrade the Italian bonds to junk. So how possible, I think remote, but possible is that the Italian government goes in default? This is a difficult question for me to answer, so I hope the technicians and the professionals have some better ideas on this. But definitely there are some governments which are much more virtuous than the Italian government in the past. They do not think this is their problem, but in reality it is their problem, because if Italy goes in default, also the European future is at peril. Thank you very much, and very interesting conference, and I'm very happy that you decided to do this. Thank you.
Thank you very much, sir. Indeed, as all of the people are Europeans here, there's no doubt that going forward, European solidarity and European solutions will have to be found. It is the second question is a little bit for me a crystal ball question, where it's also very much in the hands of our political leaders. But turning first to your first question and then opening the floor to whoever wants to comment of the speakers, John or Rainer or Tanguy on or Othmar on the second question. But the first question was very much aimed, I think, at Mr. Karas, as you said. So I will give him the floor first, and then maybe other speakers, John, may want to say something else. Othmar. Othmar? Okay, in that case,
oh yeah,
John,
it's okay. It's okay.
yeah, Othmar, you're there because
no,
there was
the
the first question was directed by your colleague directly at you, I think, and maybe John also has an idea on the timing of the Green Deal. Can we keep the timing? Because John clearly said, of course, that there are
I understand
the crisis on has not gone. Okay, Othmar, you have the floor.
Two answers. The first one, I am fully agree with Tank, as he mentioned. For the recovery plan, the Green Deal principles must be the basic. And the second point is, I think we have to think the industrial strategy, the single market strategy, the Green Deal, and the recovery plan as a package. And Ursula von der Leyen proposed yesterday, we need a second deal. After the Green Deal, we need a White Deal. To think the Green Deal and the White Deal were the white shorts for the health sector. We have to think them together. It is a question of health. Climate on the one hand and health on the other hand, they are connected. And both can be a powerful investment for our economy. So we have to think it together. We have not to say the recovery plan has to pull. We have to push the recovery plan and to cancel the Green Deal. The Green Deal must part of the recovery plan on the principles for more sustainability in our daily life. To your second question, to the political issue, you are totally right. I think on the long run, when we solved the health problem and the economic problem, I think we can have a big political problem. At the moment, we have a debate about our liberal democracy, about the role of parliaments. Look to Poland, look to Hungary. So the systemic issue to defend our institutions, to defend our parliaments, to defend the European Solidarity Union is huge. And that is why I mentioned on the beginning the Council of Ministers of Finance, because that must be a common answer, a European answer. We need European projects. And if we don't have more solidarity in the European Union, we can have a political crisis, especially in Italy, in Hungary, and in Spain, in the southern countries. And that is the reason why we need a common solidarity financial instrument, a new instrument to have enough on money for the recovery plan and not only special national projects.
Yeah. That is a very clear, clear answer. Indeed, the chance to that Italy goes into default, we no doubt need European answers. John, I heard you on the two questions or only one. Up to you.
Thanks, Wim. Well, I'll leave the political question to others more qualified than me to discuss them, but I would just say I agree with Othmar that we do need a more Europe in this response, and certainly not less. On the Green Deal, as I said in my early introduction, I mean, the date of 2050 is not arbitrary. The date of 2050 is, we are told by scientists, the sort of last moment when we can stop a climate catastrophe. So it's not that we can just choose to target 2055 because we feel like it. 2050 is a fixed point, so we have to keep it. And secondly, it seems to me if we're going to rebuild a large part of the capital structure of Europe, why should we not rebuild it in a way that is consistent with that 2050 target? So in quite, as I said, the opposite, it's not that this is a reason to move away from the Green Deal, it's a reason to move even more into the Green Deal, it seems to me. And as every good crisis presents opportunities, we should take that opportunity. On the debt of Italy, well, of course, we know that solving this particular short-term symmetric shock is going to involve an increase in public finance, an increase in fiscal debt, I would say fiscal pressure across the Union. And some member states went into it in better shape than others, and therefore they're going to come out of it again in relatively different shape. And Italy is one of those countries which entered with a very high debt level and will leave with an even higher debt level. I think there are a number of things to think about here. Firstly, the debt servicing environment is very favorable and will be favorable. Interest rates were already low and are now lower. I think will stay low coming out of this crisis. I think the ECB has done made a lot of efforts to keep markets opening, not for the sake just of keeping markets open, but for keeping its own monetary policy in shape. But I do believe that there also has to be, as Othmar said, an EU solution, an EU part of this recovery solution. Now, I think if you put those three things together, plus Italy making, giving evidence of reassurance to the market, then this can be managed. But of course, no one is denying that debt rates are going to go up. But I think if these four things are in place, it can be managed.
Hi,
Thank you
could I come in?
very much. Yes. Who is this?
Francis Fitzgerald?
Yes, please.
Yes,
You
is
have
that
the
okay?
floor.
Yes, thank you.
Welcome.
Thank you very much, and hello everybody, and thank you for organising this and for the presentations. They've been really excellent. A couple of points. John, you said that we went into this not very coordinated, but you hoped that we would exit it in a coordinated way. And I think that's really important because clearly, the crisis is showing up huge gaps across Europe in terms of healthcare, access to medicines, all of these issues which are really preoccupying everybody at the moment. But what I wanted to say is, listening to everybody, and I think we all know, and in Ireland we suffered a lot 10 years ago, but we have recovered, is that the kind of changes that have been made in the financial sector and right across that we've been hearing about and we know have happened. I mean, it really is an excellent story in terms of helping the recovery. And I want to make the point that from a communications standpoint, I think there's a lot of potential for us to tell this story, and we absolutely need to be able to do that. And that's right across the Council, Commission and so on, because I think the EU has taken a blow, and it's going to be terribly important to get across, because everybody knows about the austerity before. But the fact that these changes have been made and are actually going to help us so much now, it's a very obvious thing to say, but I think it's really important that we, make sure that we are, are very much out there in the recovery, naming what is happening and the flexibilities that have been shown and so on. And we can see across all sectors there is coping at present. There is a point, of course, depending on how long it goes on. And the second point I want to make is in relation to the liquidity has clearly been made available. I have a slight worry about, because so many small firms, and they are the backbone, are stressed at the moment, whether the banks are actually going to make that money available as quickly as it's needed. And I'm wondering, have we good enough feedback mechanisms on that? And is there any international Europe-wide picture emerging on whether or not all of this flexibility is getting to the people that need it in a timely way? Thank you very much.
Okay. It was a clear statement. I do believe, see, I'm an optimist, but not only an optimist. I have been impressed by the structures that were put in place, and it is a good story. It is a good story. The banking union is a clear story. The capital market union can be a bit better, but is still a good story. But also the amount of capital and liquidity. And then going to your next question, is it getting where it's needed? What we have at the European Banking Federation is a monitoring mechanism with all the federations in the national countries. And you see that many of these liquidity measures are mixed up with national measures at national level. And many of the member states have taken a very different approach. So in some you see that not only the amount that was made of liquidity that was made available is impressive, but also the speed and the lack of bureaucracy with which it's administered to the small and medium-sized businesses. In other countries, in my view, there is still something to learn. The money is available, but you see that it is relatively slow getting to the right place. But I guess that Othmar and John and maybe others want to contribute to that as well.
I mean, maybe I'll come in on the story. I think Francis is 100% correct. I mean, it is a very good story. I mean, for me personally, to the extent you can enjoy anything about this crisis, the one thing I noticed that in the meetings I attend, both within the Commission and outside, it's quite nice compared to 10 years ago to not to be the centre, not to be answering all the questions, not to be explaining all the mistakes that were made beforehand and that we were all responsible for. So it is a nice story, and I think we should tell it. One little caveat I would have is that we should tell the good story, but it could be better. We could have done more. We could have got more banking union. We could have got more capital market union. So I'm very happy to sell the good story, but I'm not going to give the member states 10 out of 10.
Yeah, fair enough.
So that's one.
You have all of us to remind the member states that it could have been better, because that's their place that I would like to address it. And it's easier even for us than for you, probably.
Yes, indeed. And on liquidity, just to, as I said earlier, it's not easy on a kind of systematic basis to get kind of data on such a regular basis. So we're relying on people like Wim and like people elsewhere in the banks. We're in contact with them continuously to tell us what's happening on the ground. And as he said, what we're picking up is that there is a bit of a gap between the announcement of schemes and the putting in place of schemes. That's a sort of that's a normal kind of bureaucratic logjam. Now, the bureaucracy is being taken out of it, but there's just a capacity. I mean, the number of small businesses needing loans are in the thousands, and that's creating a sort of administrative burden. But I think most of the member states are doing the best they can to get through that and get the money out, because they know how important it is that the money flows, not just in large amounts, but quickly.
Yeah, absolutely clear. I see that the issue is always, if you have the right seminar, time is always too short. And we are almost at the hour. I will let it run a little bit longer to be sure that all the members of the European Parliament have been able to speak. Are there any other members of Parliament who would like to ask a question or make a statement? No, then I hope that indeed all of you are enjoying, because for me, communication, getting together, the ability to listen to each other is so essential. And I will give the floor also to Othmar, of course. There is one question from the floor that I want to ask to John that came in from Eleni Canelli of Accountancy Europe. And it seems directed immediately at you, John, because the question is, it was heard that FISMA has been in touch with companies to inquire alleviating measures as a result of the corona crisis, i.e. Seize the obligation to audit or extend auditors' rotation periods. Are you working on this? That's the question by Accountancy Europe.
The only formal contacts we've been making with auditors is to make sure that they understand the interpretation of IFRS 9 as we have put it in the various communications of the ESAs. So we have spoken to them to be sure that what the flexibility we have given to the banks and the accountants within the banks to treat certain loan loss provisioning under IFRS 9 is fully understood by the auditors. and that the auditors take that into account when they do their audits.
Okay.
That's
very clear answer. Then I will pass the floor for some closing remarks by our chairman of the EPFSF, Othmar Karas, and then I will close the seminar. Othmar.
Yes, thank you very much. Thank you very much to all of you for your questions and statements. But Francis Fitzgerald give the finger on the right point. We are all part of the communication. And the problem is we have national communications, European communications, we have so many different communications. And that is our problem. The recovery plan must tell a new European story.
Yeah.
What the European Union is. And the European Union is a solidarity union. And we have a global virus. So we need a common European answer and not only national answers. And that is what we have to do, to say all national activities at the moment have a European framework about the Stability and Growth Pact and others. So we, on the European side, we are more flexible than in the past to give the member states the possibility to give the specific right answers. But that is not enough. Now we have to discuss what is our common recovery plan, and the common recovery plan can tell a new story. And the combination of Green Deal and White Deal and the industry strategy and the single market strategy can make a new project, a sustainable Europe. Europe, and we have to invest in a sustainable, future-oriented Europe. That must be the answer. And all others are individual projects for this common story. And we have to work this common story. We have to say what we have done in the past, but we have also to say what are our common goals. We have not only discussed the differences, not only to explain the numbers, we have to speak about our common principles and our common goals and what we achieved together. Then we have a strong story.
Thank you very much, Othmar. And indeed, hopefully, if this terrible health crisis and economic crisis brings something, it shows the good foundations on which Europe is built and the European Union continuing together with solidarity with those who need it and hopefully tell a new story. Thank you very much, all of you. This was a first seminar. For us, it was a test. I hope you all enjoyed listening to it. I think it's, again, as I said, important that we constantly hear and constantly keep in touch with each other, and that we are able to give each other signals on what goes right, but also what goes wrong and where obstacles are. I know that the European Parliament is very ready to listen not to all stakeholders, to all citizens, and to the Commission and the Member States to hear where they can help and where they can help alleviate the burden as much as possible. What we do plan is another seminar, of course, in close consultation with our chairman, Othmar Karas, and you can think about, for instance, the technical resilience of Europe, how the technical infrastructures are holding up. We are now collectively with millions in video calls, but also if there are problems in the payments infrastructure, for instance, or if there are more cyber attacks. These kind of subjects we will try to table and hope to keep you all informed, but also enable you to talk to us on or offline. I want to thank John, Othmar, Tanguy, and Reiner for their introductions, and all of you for listening, but also for your statements and help. And I want to wish you a very safe, healthy, and good Easter. Thank you very much.
Thank you.
Thank you. Bye-bye.
Thank you.
Thank you.
Thank you, Wim. Thank you.
Thank you.
Wim.
Thank
Thank
you.
you.
Bye.
Thank you all. Goodbye.